G'day guys, Seeney here, and welcome to another episode on the Australian Wealth Channel. And in this episode, we're talking about some of the stocks that I have just bought. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So ever since the start of July, in this new financial year, we've gotten ourselves through a lockdown and now we're back working, which has been absolutely fantastic. I just bought myself a new tailored suit, so I have an excuse to wear it on the channel now, which is great. So please leave me a comment. I've got my name even on the inside, which is pretty cool. But we have to talk about some of the stocks that I've been buying, because I've actually loaded in about $72,000 in this financial year since July, because I've seen so many opportunities in the market. Now, of course, everything I talk about in this video, it's important that you take it with a grain of salt. Not a financial advisor, and I'm not your financial advisor, so you need to do your own research when it comes to investing in anything. Very important. So with that disclaimer, I'm going to get into some of the stocks that I've purchased and some of the reasons that I believe that these are going to be excellent bets going forward into 2022. Now, pretty much all of my purchases for the last 6 months or so have been into small cap stocks. Now, the reason that I've been buying into small cap stocks as opposed to large companies like, say, Apple and Google is because they are insanely overvalued, these large tech stocks at the moment, compared to the small caps. We're seeing a huge divergence at the moment. The large caps, people are flocking into for safety, and as a result, the valuations of them are insanely stretched. You know, I just really can't see too much more return coming from those large stocks. You know, if you look at the market, it looks like everything's doing fine because there's been so much money that's gone into the large caps and they're basically propping up the rest of the market. We've seen some huge declines in small cap stocks, which has been quite good actually, because I've been loading in really heavily. So I'm going to talk about some of those stocks right now. Some of these you might be interested in buying after you do your own research. So the first one I talk about a lot on this channel is, of course, the Tattooed Chef. Now, anyone that's been following this channel knows that I have a huge position in Tattooed Chef. If I just look this one up right now in my portfolio, I own about 3,500 shares of Tattooed Chef. So it's a pretty large position. You know, we're looking at roughly about $80,000 at the moment for this particular stock. That has fluctuated quite a bit because at the moment, Tattooed Chef is incredibly cheap. As of today, it's around $16 US a share, but it has traded all the way from into the high 14s all the way up to like $24, $25. So I've seen some big swings in that position because I have a lot of money in the stock. But I personally believe that this one is going to be excellent going forward over the next few years. Now, there's a number of different reasons for this. I've actually loaded in about $18,000 extra into Tattooed Chef to take advantage of some of these stock declines that we've seen, because we've seen some huge declines in Tattooed Chef. Now, some of the reasons that I think Tattooed Chef going forward is going to be a great company is due to the growth rate. In the last earnings, there was about 45% revenue growth. Absolutely fantastic number. I'm really happy with that, and I think that that's going to continue growing going forward. You know, we might see 30% going forward, and that's still really strong growth, which I like. They're expanding into extra categories. They're vertically integrated. The management team is fantastic, and the store count is just growing like nobody's business. So there's a lot of catalysts that I really like about Tattooed Chef. It's also incredibly highly shorted at the moment for some reason. I think they're playing with fire by doing this because we've seen such a decline. So a lot of people have been continuing to load in on those shorts, and all it's going to take is a substantial move upwards and they're going to get squeezed out. So there is some potential there. So I've been loading quite heavily into Tattooed Chef. On top of that, I've loaded in about 22,000 into VOYG. This is quite a new position for me. I've been holding this for about 3 months or so. And only a few weeks after I'd finished loading into my position, the stock just went boo, straight up, which has been great for me. It has come down a little bit since then. It's nearly at the point where I started buying VOYG. So I'm getting close to actually just topping up this position, because I think for the long term, there's a high risk and a very, very high reward. There's a very likely chance that this could 10x. This is one of those stocks that could easily do it. Their margins are huge. 50% of the money they make is going to the bottom line. The revenue growth is huge. They have a very competent management team. All the things that you want to look for in a growth company. So that's one that I have invested into, VOYG Digital. It's on the Toronto Stock Exchange, I believe. The next one, this is one that I actually made a video about a little while ago, and this stock is Corsair Gaming. And when I made this video, it was around $28 a share. And this is one that I actually said, I'm probably not going to buy this purely because they're in the hardware game. It means that their margins are a bit lower than, say, a software company. But since then, what we've seen is a huge decline in the stock price to the point where it just makes sense to buy this particular stock. There's a stat going around that their price to sales ratio is going to be under 1 very soon if this stock keeps going. So the stock is now trading around the $20 mark. So it's dropped about $8 a share, which is a huge amount. So at this point, Corsair Gaming has started to become quite attractive for me. This is not going to be a huge growth beast that's going to grow like 100% a year, but they have consistent revenue growth. And if you ask me, is gaming going to be bigger in the future or smaller? It's definitely going to be bigger. So Corsair Gaming is going to continue to grow, at potentially a double-digit rate for revenue growth. And they've been going for a very long time. It's a very stable business model. And to see it decline this much, eventually things just get to a point where you can't ignore them. And this is definitely one of those stocks. So I've loaded in about $7.5 grand to Corsair as a start. If we see it continue to drop under 20, I'm going to be continuing to buy heavier and heavier because it's just getting a bit silly at this point for me. The next stock that I have bought in this financial year is Coinbase, which is a fantastic company. It's very much the same as VOYG. They have big revenue growth and they have a lot of money that's going straight to the bottom line. Their margins are fantastic. Their team, management team is really strong, and they're the biggest crypto exchange in the world. And that's definitely going to be a growth area going forward. So I started loading into Coinbase before this financial year, but in this financial year, I've added about $15,000 to that position, and we are up pretty significantly at this point because we loaded in around that 220 mark. And now I believe that Coinbase is around 250. It was in the 300s, but of course, like a lot of other stocks, it's come down. So for me, if I see it decline a little bit further, it's starting to get attractive for buying again. And that's what happens. Eventually, these stocks get to a point where they just become so attractive to buyers and you just run out of sellers. So personally, I think Coinbase is a winner long term. Now, there's a couple of new positions which I wanted to talk about. Some of these other ones I've been holding for a while, but after this stock market drop in the small caps, there were so many more buying opportunities, which I was really pleased about because it was becoming quite difficult to find good deals in the stock market at a point. So I want to go through some of these new positions. So the first one you might be familiar with is called AFRM. Now, AFRM is one of the buy now, pay later services. They're doing a partnership with Amazon, and I think anyone that's going to be doing a partnership with Amazon opens up a huge market for this particular company that's doing business with them. So it's only a small position at this point. I've only just started loading into this stock. So I put $2,300 into AFRM. I have a cost basis of around $111. So I feel pretty confident about this one going forward. We've seen that one trade around $140, $150, $160 a share. It is quite volatile, this one, so it's worth keeping that in mind. It's going to go up a lot, going to go down a lot. But anytime there's an opportunity where I see it drop, I'm probably just going to be adding small amounts to this position. It's not going to be like a tattooed chef size position for me. But I think it's definitely one that I'm going to be making money on going forward because the revenue growth is fantastic amongst a whole heap of other things. And that's basically a theme through my portfolio. I'm looking for big revenue growth. The next one that I bought, which just got too cheap to ignore, is Teladoc. Now, I don't tend to invest too much into the healthcare space because it's not something that I have a huge amount of knowledge in. But there is a lot of knowledge that I have about the working from home movement and the way things are going in the future that offsets a little bit of my lack of understanding within the healthcare sector. Now, everything is going working from home and moving online. So this is a company where that is the next logical step. A lot of doctor's appointments can easily be moved to the online space. And Teladoc is one of those companies that is absolutely poised to do incredibly well out of this trend. Once again, the revenue growth is fantastic. Obviously not growing quite as fast as it was in 2020 for obvious reasons. It's kind of pulled a lot of that demand forward. But I think in the future, the growth is going to continue. And of course, the stock price just got to a level where I just had to start buying because it's basically at the same price that it was when the pandemic started or thereabouts, which is just crazy to me. Because a lot of these trends that the coronavirus has caused are just going to continue going forward. You know, it's kind of created a shift in a lot of ways. So I have a cost basis of about $90 for Teladoc, so I'm up just marginally on that. I've only loaded about $1,000 in, so it's not really that much. But if we do see declines further, then you can guarantee that I'm going to continue to buy into this one. The next one, which I think is a fantastic bet going forward, due to the fact that they have an incredible number of government contracts. And it's an area of technology going forward that is going to be incredibly valuable to society as we move forward, and that's the intersection of AI and data. And of course, that company is Palantir. Now, Palantir is another rapidly growing company. And the reason I like this one is because they have so many government contracts. And once you start getting in really good with the government, it's really unlikely that you're going to be dropped by them if you're doing a fantastic job. And Palantir is massively involved with data, and I think going forward, data is going to become even more important than it is now. Basically, every major company in the world realizes how valuable data is. And not only companies, but also governments. So Palantir, I think, is going to be a safe one going forward. It is trading still quite rich. It was even more expensive. But I think over the next 4 to 5 years, this is a company that's going to continue to grow, and that valuation is going to get pushed up even more. So I have a cost basis of around $18.45 per share. And this is one that I've just started loading in also, so I only have about $1,000 in this particular stock. The other one that I've been buying up really heavy is Macquarie Bank. You know, now that I'm in my 30s, I thought it was good to diversify my stocks a little bit more because, you know, as you start to move on in life, you need to balance your risk. You don't want any devastation as the older you get. So I think that Macquarie Bank is an excellent one because they're one of the largest holders of infrastructure in the entire world. And I think anyone that's interested in green technology going forward, where there's going to be so many government dollars spent, a company like Macquarie Bank, which finances a lot of these operations and owns a lot of these things, is going to be a great bet going forward. So I've actually loaded in about $5,000 to Macquarie Bank. And it has gone up since then. I'm not interested in buying any more, but if we do see drops under $190 a share, then that is one that I am definitely going to get myself into. So I'm expecting a big bounce in these stocks come 2020, which is why I've bought so heavily. So I still have a fair whack of cash that is ready to go. If we see further declines, I am ready. Give me those cheap stocks. But in the meantime, you know, I'm just continuing to load into companies that I feel are undervalued. I've got my buy orders set at different prices. So if we see any drops overnight, because I'm in Australia, obviously, so the market's open at night. If we get those drops, my buy order is going to get hit and I will own even more shares. So that is a total of $72,000 invested since July. So I'm hoping that we're going to see some big moves upward and this stock portfolio is going to grow quite significantly in the future. So thank you guys so much for watching. If you wanted to start your investing journey, I have a link to Stake in the description. You sign up to the brokerage and put some money in and they're going to give you a free stock, which is great. And if you want to track your net worth and see how you're going along on your money journey, I have a link to VOYG Money and they'll give you $5 just for signing up and connecting an account. Great company. That's how I track my net worth. So thank you guys so much for watching. I want to hear about the stocks that you are buying at the moment. So please make sure you like and subscribe to this channel. It really helps to get these videos out to more people. So my name is Seeney. Leave me a comment about the suit. It's brand new and we'll see you later.